hope you're all doing good. Welcome back to another lesson. So this is lesson number 18. It's going to be one of the first lessons of, this type of style. And some of the upcoming lessons, right? Not all of them, but some of them will include work on psychology. Now, I'm not going to sit here and tell you guys how to, be confident. And of course, we'll go through some of the basics, but rather it's going to be the optimization of your trading system. If you are on this video, right, and you've covered all the technical so far, you understand, time and price, things happen at a certain time, we trade during certain times, we expect certain things from price, right? You have parameters to set up a trading system. I need to see X, Y, Z, and when this happens, I will execute. I'm going to risk X, Y, Z, right? You want to test that system. And one of the first steps, right, to building these systems, from my very own experience and looking at others, I think very important is profit taking, right? Contributing to profitability. Where you take profit is going to matter. So let's get into it. So as I was saying before, right, everything I've taught you guys, we have reason behind it. Not only do we have reason, we have data, right? It's systematic. More importantly, it's logical. When there's reasoning behind it, the concept is logical. What this means is, right, everything you're doing has a purpose. You're not doing things, I felt like it, or for the sake of it. It's very important every time you close a trade, open a trade, adjust something, perhaps skim a position, you have reasoning behind it. And it needs to be valid reasoning, right? It can't just be like, I got a bad feeling. Like, I understand sometimes people may do that, potentially close a trade, I got a bad feeling. But in reality, price action tells you everything you need to know. It's data, it's lifetime data telling you what essentially price is doing, right? And where it may be heading. We use the data in front of us as an input to predict the output of what could happen next, right? The next thing, a system needs to be quantifiable and tracked. So what do I mean by this, right? Quantifiable, starting with the basics, or you're catching trades that are, 1.5 or whatever. You're tracking the R. Tracking the pips, potentially. I know everyone doesn't do that, but, it could be good to do. And what this means, right? Over a period of time, you will gain objectivity. And what I mean by that is that over a certain amount of time, let's say you trade for 100 days and you track every single trade, right? You track how many pips, how many are, when you took your trade, right? London kill zone, New York kill zone, potentially London close kill zone. You track this all in a spreadsheet, for example. After the 100 days, you can come back and be like, most of my winning trades were in London open kill zone on Euro USD, and on average, it was a 10 pip trade. My RR was 1.4, right? Because that's what you can do with data, right? The more data collection you do, the better. Over a longer period of time, you will get more balanced results. Results that are very reflective of the trading you do. What this depends on, though, is you doing the same thing over and over, right? If you're constantly changing variables, how you trade and whatnot, it's going to be difficult to, quantify everything. Well, you can quantify it and track it, but, to interpret it and actually use that to improve. Because let's look at it this way, right? Imagine you've tracked lots of data, you've traded 200 days, and, you've tracked everything inside out. And then you look at your results and you're like, wait, I lose more trades in New York kill zone than I win. So what can you do? Start avoiding New York kill zone, right? It's just logic. There might be a lot of factors to that, I don't know, perhaps you work a job and work gets intense at that time. Like there could be so many things, but this is why each one of you individually has to track it, right? And understand what works for you. I was speaking about this a lot recently, being self-analytical. Trading is one of those games where you have to look at yourself, be like, what's going wrong? And then reverse engineer that to then get better. You get better. You potentially have other flaws. You develop them and you repeat. And you keep doing that. And over time, you're just refining. You're just chiseling away at the errors and you're going to keep getting better. The last point I want to make is some people have this problem with confidence. Oh, I don't know why I didn't set this trade. I didn't set this limit. Right? If you collect this data, even if it is on a demo, right, but you treat it like a real account and you track all of this data, that allows you to be confident. You have real numbers to back up your trading. Oh, my win rate over 3 months was 70%. I won 70% of my trades. Right? So are you going to be annoyed you just lost one? You're not going to lose confidence because you're going to keep doing what you're doing, and 70% of the time you're going to win. Correct? That's how you build your confidence. You need reasoning again behind it. You need some sort of proof to show yourself. So now, let's talk about profit taking, right? That's one of the big points of this video. We've tracked everything. We've understood, let's say when we set trades, the R of the trade is affecting our profitability. So first of all, what is the OTE? The optimal trade entry. All this means, right, when we look at a range, the way I like to see it to, just simplify it. When we're shorting, we shorten the premium. When we're buying a discount. I consider anything below above the 0.5 OTE, depending on, if you're buying or selling. When we use the OTE, we want it to be in line with bias and expansion, right? And now, what is the point of, this OTE, this thing that I'm mentioning? Well, let's jump on the charts and I'll show you guys. Okay, so this is the Euro USD chart, right? Of course, we like to trade during London kill zone. The first thing that my eyes are drawn to, right? We have this small uptrend here. In fact, we even, had this consolidation. I'd consider this a market maker sell model. Probably a lot cleaner on like the 3 or 1 minute. But anyways, we take this low, a lot of displacement, and we have a market structure shift because, we came up here and we also ran a bit of liquidity and we've moved lower. What's happened here, right? We've got this move. Now, what do we like to do? We consider the first, right, premium array when we're shorting. So what's the first premium array you guys can pick up on? I know some people may think this candle's an order block. I wouldn't take that. That body's too small. It's too wicky. We also have this liquidity building up, right? Total soup or Alfed potentially. We have this imbalance, but not only is this an imbalance, it's lined up with the breaker. So me personally, right, I would have entered a short position as so. Now, let's just think about. So when I mention OT, just to clarify, to me it's just the fibs. Literally just the fibs. This is my OT. What does my OT signify? Right, so first of all, it's actually the framework for my trade. Oh, here's premium, here's discount. This is my current range, high to low. It's doing a lot of things at once. I want to move into my premium. I want to short. I'm looking for a raise above the 0.5. Of course, I found this breaker block and I've now decided, I'm going to use it as a trade. I'm going to short this. And if you shorted this, if you took this trade, you would have made 1.6 R. Right, not bad. Some of you are probably thinking that's, kind of shit. 1.6 R, like, if you let this trade run, wow, it could have done. That's just in that run, it would have done 4R. If you let it run for the day, it would have done 9R. Yeah, you're right. Of course it would have. Now consider this, right? I understand the perspective, let's hold on to trades. From here, right, when you would have got tapped into the trade, I want you guys to pay attention, it's 4:15, right? Your TP would have hit at 05:05, so that you're not even holding the trade for an hour. That's 50 minutes in the trade, right? And it's fairly quick. It gave you displacement in your direction, right? In line with your bias. So then you could have been confident, yeah, this is probably going to head towards this external liquidity. This is where we're drawing, and we're in and out of the trade, right? You would have been in and out fairly quick, and it's drilling in the kill zone, and you can call it a day. 1.6R is not a bad day at all. At all. Now, same thing here. Now, let's imagine, you've seen this strong move up. It's a market structure shift. Now, in this one, potentially, you would have got swerved. I would consider this candle as the breaker order block imbalance. So let's not take this one, right? Because personally, I would have got swerved. So from this low to the next high up. Okay, so I like this one. First of all, we consider both of these candles the order block. Not only that, we have a mitigation block. I would have set my long like that, right? Because what I'm trying to show you guys is, if you know your bias, right, and you know where price is headed, you can use this OTE, right, to get in and out of trades fairly quick. So now let's look at this one as an example. Yeah, you get tapped into the trade at 2:30. Your take profit hit at 2:40. You made 1% in 10 minutes. It doesn't sound like a lot. I know. What I'm trying to show you guys is that this is very repeatable. Yeah. And what do I mean by that? Repeatable. I've taught you guys the technicals to know where the high or the low of the day is put in. Correct? Yeah. If we go ahead and say, oh yeah, this is, going to be the low of the day. Or rather here, because, this is New York midnight press. This is going to be the low of the day. Cool. Your ADR is 100 pips, 120, whatever. Price can move from here to about here. If you line that up with points of liquidity, you can find a fairly decent target and say, oh, I expect price to go at least here. So up until price reaching that target, right? What's that target called? Our drawn liquidity. What can you do? You can look for these small ranges, these small OTEs, and all you need to do is catch one. You don't have to catch all of them. You don't have to catch several. Catch one. Right? Okay, so why are we stopping at one? I've written here 1 a week. That is my target. 1 to 2R a week. 2% in a week. That is my target. That's it. Now let's assume you're doing a MFF Fund challenge here. Apologies about my cat in the back. He's just scratching himself. Okay. So if you're doing an MFF Fund challenge and you make 2% a week for 4 weeks, right? You pass your challenge, right? You pass phase 1, correct? And now for phase 2, let's say you repeat the same thing. You're just looking for a 1 to 2 each week. You pass phase 2 within 2.5 weeks. Now, I know it's not exactly accounting for losses and other things. Understandable, right? But you can probably find one of these every single day. One OTE. And on some days, it will be much higher probability and clearer than other days. And that is when you want to be executing. Now, the way I see it is, right, okay, I have a 2% target in a week. I don't force that upon myself, but that is ideally what I want to get in a week. If I get that on a Tuesday, there's two types of people. Oh, I got it on a Tuesday, let me go back in the market on Wednesday and try and milk it more. I understand, but you don't need to. Because if you can get into the habit of, consistently only taking high quality setups and getting these small amounts, right? Imagine these small amounts on a big account. Now, I know we think, 300k funded, 600k funded is crazy. It is. It's insane money for, I'm pretty sure, every single person in the group chat, right? But in this trading game, there's a lot of money. There's private investors. There's companies offering millions. Imagine 1% on, I don't know, a 10 million account. Right? Think about the possibilities. Now, what's in reach for us, yeah? We can, realistically, everyone can get an MFF funded. Literally, we can go out and buy an MFF funded, right? We can buy a 600k. So you can buy 300k. Let's imagine we've got 600k funded. And you make 1.5%. The figure I've used, 1.5%, I'm just using it as a kind of ballpark figure for OTE. When I draw my OTEs and, I target external, I usually end up around 1.5 or if I'm lucky, sometimes 2 or depending on what array I'm taking. But let's stick with 1.5. That would come out to 6% a month. And I think that is very sustainable and achievable. Now, I understand 6% can't pass the challenge. So when we're doing our challenge phase, it's a bit different. But when you're live, right, less is more. 6% on a 600k. 36k in a month. Right? Just think about the numbers for a second. I know we can always make more, but 36k in a month. In a year, you're looking at 410k, I think, roughly. Something like that. That is insane money from doing what? A 10-minute trade, a 20-minute, 30-minute, not even stress, right? Because you have so much faith in what you're doing. You've tested it again and again. Imagine, right? Now, this is what I want you to consider, how high your win rate is going to be targeting the small targets rather than trying to hold 1 to 3 or 1 to 4 Trades go 1 to 1 very quick. Literally, the last trade I just showed you guys was 10 minutes long. 10 minutes long for a 1 to 1. Imagine you're in and out. 1%, right? If that's a 600k, it's still 6k. In 10 minutes, you would have made 6k. It's very good money, I would argue, right? So, what I'm trying to say here is, there's a phrase that ICT uses. He says, pick the low-hanging fruit, right, in a tree. That's where the example comes from. In the tree, when you have fruit hanging, do you always try and climb and get the highest one possible? No. Take what's right in front of you. That's the same with these trades. Take what's right there and get out of the market. The longer you spend in the market, the more exposed you are. The more open you are to taking a loss or something going wrong. The quicker you can execute, get in and out, and take a win, it's very repeatable. You can do it again and again and again. And when you're taking the low-hanging fruit, your win rate can also be higher. From a psychological perspective, there's also a lot, less stress involved if you're in and out of the market very quick. And this is coming from experience, trust me. You can literally wake up, London Open kill zone, I just caught a 1 to 1.5 hour. Done for the day. Go about your day. Go gym. Go train. Go, whatever you like doing. You can literally just go about your day. Because I understand that some of you guys may not have massive capital right now. 1.5% isn't a lot. But start thinking about the future when you're trading. Set yourself up to be in that mindset from now. Because it's not going to be, trust me, it's not going to be like, oh yeah, or while I have a 5k account, I'm going to try and rinse this percent so I can make, lots of money. But one day when I have a 200k account, it's okay, I'll calm down and I'll start doing 1% a week. That's not how it works. That's not how habits work. It's not how the human brain works. You have to adopt that from now. And you need to build a system. Coming back to this slide, I explained what building a system means and what it does. Start doing that from now. If you don't already, please journal your trades, track your trades, everything. If you guys need examples, I'm happy to provide. I can even, give you my spreadsheets, make you example ones to fill in and follow. But that is it for today's lesson. I hope that's very helpful, and I hope, you guys are going to incorporate that in your trading, because I do see a lot of you taking trades and, sometimes the trade's reversed on you, or you just waited ages for it to hit profit. And I know what sitting in a trade can do to you. Once it finally hits take profit, you're like, oh yeah. But imagine sitting in a trade for ages and just hitting stop loss. Like, it's not a good feeling. I've been there. Just try and help yourself with these things, and I'll be back soon with another lesson.